The billion-dollar bet that shook Wall Street, Herbalife's rise and fall. Imagine staking $1 billion on the collapse of a company everyone else hailed as the American dream. A company promising health, wealth, and freedom through nutrition shakes and relentless hustle. One man, Bill Ackman, dared to call it a lie, igniting a financial firestorm that became one of Wall Street's wildest showdowns. This is the story of how a hedge fund titan accused multi-billion-dollar giant Herbalife of running a pyramid scheme, and what happens when the truth is right but comes too soon to win. Buckle up, because this tale of greed, betrayal, and redemption could go viral. The Herbalife dream: health, hustle, and hope. Herbalife wasn't just a company, it was a movement. Founded in 1980, it sold nutritional shakes and supplements, but its real product was a promise: financial independence. Be your own boss. Live the life you deserve. These weren't just slogans. They were the heartbeat of a multi-level marketing MLM empire. By 2011, Herbalife's revenue skyrocketed from $1 billion to nearly $5 billion in a decade. Its CEO, Michael Johnson, earned $90 million in a single year, commanding stages like a rock star, rallying millions of distributors with promises of riches. Here's how it worked. Sign up, buy Herbalife products at a discount, and sell them to your network. The real money, though, came from recruiting others. If you built a downline of recruits who also recruited, you earn a cut of their sales. The deeper your network, the bigger your paycheck. For some, it was a golden ticket. For most, a garage full of unsold shakes and shattered dreams. Distributors invested thousands, starter kits, inventory, even Herbalife clubs, only to find a market oversaturated and the profits elusive. Enter Bill Ackman, the crusader with $1 billion bet. In December 2012, hedge fund manager Bill Ackman stepped onto a New York stage and dropped a bombshell. In a 300-slide presentation, he declared Herbalife a fraud, a pyramid scheme dressed up as a nutrition business. His hedge fund, Pershing Square Capital, placed a $1 billion short bet against the company, predicting its stock would crash to zero. Short selling? It's like borrowing a rare coin, selling it high, buying it back cheap, and pocketing the difference. Ackman wasn't just betting against Herbalife. He was waging war. Ackman's case was brutal. He argued Herbalife's money came not from selling shakes, but from recruiting new distributors who bought products they couldn't sell. His team spent $50 million on research, investigators, former employees, even undercover ops. He estimated 90% of Herbalife's profits came from recruitment, not product sales. Only 12,000 top-tier distributors made real money, while 2.4 million others lost everything. This is Robin Hood in reverse, Ackman said, accusing Herbalife of preying on the vulnerable. He went on CNBC, testified to regulators, and shared stories of distributors left bankrupt by the dream. The Wall Street showdown: Ackman versus Icahn. Just when it seemed Ackman had Herbalife on the ropes, another Wall Street legend entered the ring: Icahn. Worth over $20 billion, Icahn was a ruthless investor with a grudge. Years earlier, Ackman had bested him in a legal fight, costing Icahn $10 million. Now, in 2013, Icahn saw his chance for revenge. He went long on Herbalife, buying massive amounts of stock and driving the price skyward. This triggered a short squeeze, forcing short sellers like Ackman to buy back stock at a loss to cover their bets. The result? A televised billionaire brawl, with Ackman and Icahn trading insults on live TV, billions at stake, and Herbalife caught in the crossfire. The turning tide: regulators step in. Ackman's campaign wasn't just talk. By 2014, the Federal Trade Commission, FTC, FBI, and SEC launched investigations into Herbalife. The stock wavered as Wall Street held its breath. In 2016, the FTC delivered its verdict. Herbalife wasn't shut down, but it paid a $200 million fine for deceptive practices and was forced to overhaul its business model. No more hyped-up earnings claims. No more aggressive recruiting. Ackman had landed a hit, but Herbalife survived. By 2018, its stock hit new highs, and Ackman, battered by years of losses, closed his $1 billion short position. The crusader had been right, but too early. The slow collapse: Herbalife's dream fades. Then, the tide turned. From June 2021, Herbalife stock began a relentless slide, losing over 80% of its value in 18 months. Earnings missed targets. Revenues shrank. The MLM model, stripped of its aggressive recruiting tactics, sputtered. In the age of e-commerce and transparency, the Herbalife dream lost its shine. Distributors quit. Recruitment dried up. Garages stayed full of unsold shakes. Ackman's thesis, once mocked, was proving true. The company hadn't collapsed overnight, but the cracks were undeniable. The aftermath: a bitter victory. Bill Ackman walked away bruised but wiser. He quit short selling, pivoting to safer investments like Chipotle and Google. In recent interviews, he's reflective, no longer the fiery activist. "It's a good day for truth," he said of Herbalife's decline. "The numbers tell the real story. Nearly 2 million distributors affected, billions in losses, lives upended by a business built on hype, not health." Icahn, he cashed out with a profit, but eventually sold his stake. Even he couldn't stop the slow bleed. The lesson: when dreams become schemes. Herbalife's story isn't just about a company. It's about hope sold in powder form, repackaged as opportunity, and delivered with a price tag. The line between a business and a scheme is thin, defined not by flashy slogans, but by who profits and who pays. Ackman may have lost the battle, but history might call him the man who saw the truth first. The tragedy? Being right doesn't always mean winning. Not when timing and narrative outweigh proof. So what's the takeaway? In a world hooked on dreams, question who's selling them. Herbalife's fall is a warning. When the promise of wealth sounds too good to be true, it probably is. Share this story, hit that like button, and let's spark a conversation, because the truth deserves to go viral.